For $10,000 in back taxes or have unfiled tax returns, U.S. Tax Shield can help you take back control. The IRS can seize your bank accounts, garnish your paycheck, close your business, and file criminal charges. Our team of tax attorneys can stop collections and get you protected. U.S. Tax Shield offers a price protection guaranteed quote to get you protected today. U.S. Tax Shield is A+ rated with the BBB, so call 800-466-9625. U.S. Tax Shield, 800-466-9625.
Broadcasting from the Kanowski-Bresney studios comes the radio medium Laura Lee Show.
I feel like you had to let him go.
Yes, it is. He was on life support.
You've taken on the burden for his passing. Is that true?
That is right.
There's something to do with a Barbie doll.
He used to stick the old school Barbie dolls in the cake.
Oh my God, you're giving me goosebumps right now.
The radio medium Laura Lee Show. Tune into your spirit every Tuesday at 4 p.m.
My name is Dale Pazinski. I volunteer with United Way to help the homeless in my community learn computer skills and build a basic resume. I don't just wear this shirt, I live it.
Give, advocate, volunteer, Live United. Go to liveunited.org. Brought to you by United Way and the Ad Council.
This is WBNW 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston, the Money Matters Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the biggest challenges in financial planning is seeing the full picture. When your investments are spread across multiple accounts, it can be difficult to know how much you actually have and whether your strategy is really working. You might be taking on more risk than you realize or missing opportunities to better align your portfolio. Bringing your accounts together can help create clarity so you can see your total assets, your true allocation, and make more informed decisions about your financial future. Our new guide is called Consolidating Investment Accounts. It walks you through how to get organized, simplify your strategy, and build a more complete financial plan. Call 800-393-4001 to get your free copy today. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
For many hardworking families and retirees, an energy bill comes with an impossible choice. Paying the bills, putting food on your table, and keeping your family warm in winter and your home cool for the summer. But it shouldn't be that way. For more than 40 years, Citizens Energy has made one simple promise: to help households afford life's basic needs. Through Joe for Oil, we help neighbors through the coldest winter nights. Now, we're building on that same promise with Joe for Sun, a new way to save on electricity year-round. Our solar projects are already in communities across Massachusetts and New York, helping thousands of households save money. For many families, that means saving up to 50% on electricity. No installation, no equipment, and you keep your utility company. Like my dad's program before, we keep it simple, helping lower your utility bill through community solar at no cost to you. Call 1-855-JOE-FOR-SUN or visit citizensenergy.com to see if you qualify. You've trusted Citizens Energy to show up when it matters most. We're still here, ready to help.
Sponsored by Citizens Energy.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today, we're talking about the top estate planning mistakes to avoid. Todd, a lot of people create their estate plan, but there are some that don't actually transfer assets into it. Can you explain why this is such a big mistake?
Sure. I mean, I'm going to try to explain it both from a revocable and an irrevocable planning standpoint. With the revocable, if you don't put assets in there, you end up leaving them owned perhaps jointly if you're married, and designated beneficiaries and the like. But if everything goes to the spouse, when one dies, then you've completely avoided your estate plan. In other words, you've set your trust up, but you went around it by leaving everything to the spouse instead of going through it by funding the trust and cramming down the assets to shelter some from estate taxes on the first death, so there's less taxed on the second death. And ultimately, on the second death, if you don't plan, there could be a probate problem because everything would go to probate if it's in their own name. The other big reason is with an irrevocable trust, of course, not funding it also can result in estate tax problems by the same way it did with the revocable trust. But in addition to not funding them with the irrevocable, you don't even begin the 5-year waiting period to get the assets protected from the nursing home. So there's a much bigger problem not funding an irrevocable trust versus not funding a revocable trust. So make sure you fund your trust if you do your planning.
Well, luckily, Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by simply calling 866-848-5699, 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Howdy ho, it's Chuck, Mike, and Tucker with you here, and happy May 1st to everyone. The last day of the week, the first day of the month, full moon. A lot happening in terms of the calendar and space right now.
Yeah, I really hadn't added the full moon to the list, but it's a Friday, why not?
Do you know that this is actually going to be a blue moon month?
Oh, no.
Yeah, two full moons in the month of May, so happy May to everyone. And we're going to kick things off talking about this piece from the New York Times. Stocks end April on a high, even as oil prices touch new peak. And here's the deal, is for the month of March, stocks and oil were negatively correlated, meaning that as oil went up, stocks went down. For the month of April, stocks and oil are positively correlated, specifically for the last 2.5 weeks now. Oil has gone on West Texas Intermediate from $80 a barrel up to, it touched 110 briefly in a couple days ago, but has since reversed a little bit. We'll talk about some of the mechanics on that if we want to. I don't know if we want to. But oil's gone up 25% in the last couple weeks, and stocks have shrugged it off, and the S&P 500 during that same time has gone from about 6,900 up to 7,260, so 3-4% on the S&P. So stocks up, oil up is what we are seeing right now. And I don't think it's entirely irrational if you're just looking at the economic data that we've been getting. The labor market seems to be firming up a little bit. We continue to see very low initial unemployment claims, and continuing claims are declining, actually. We are seeing signs that job openings are starting to come online again, and you've got all kinds of activity in freight markets. You talk to anyone in the trucking or railroad industry, and they're like, it's absolutely nuts right now. Manufacturing is cooking in Q1. It may be a restocking cycle. It may not be, but you can't deny what's happening. Sure. Things look good there. And so Couple that with, good earnings so far through the quarter. And ultimately, the picture that you get is one where, to this point, energy prices have gone up a lot. We don't really like it, but you'd be hard-pressed to be like, hey, this has dramatically altered the trajectory of the U.S. economy and the data to what we've seen to this point. Like, I think that's fair. That's the read.
So where did we end April? A good up 9% plus on the S&P 500 after obviously dropping for the month of March. I think year to date we're up around 5 on the S&P. And it's been it's been two different markets, right? A energy market that's still...
S&P went up 10.42%.
For the month
of April. Yeah. Opened at 65.56, closed at 72.09.
Yeah.
And so ultimately, like where we sit right now is that the market is pricing in that what we have seen from the economic data is going to continue. And quite honestly, if it does, the market's pricing in the right thing. The question is going to be, is that what we actually get? And I think it is a very, very real question because we went through the math on yesterday's show. We went through a little bit of it on Wednesdays. I'm not going to do it every day for the entire summer because that would be kind of a horrible show.
Nothing like some good radio math.
But the math works out this way. If nothing else changes in the Strait of Hormuz, the U.S. oil system reaches minimum operational capacity sometime between early July and late September, most likely in the middle of that. And at that point, prices need to rise further. And leading up to that point, prices need to rise further in order to destroy demand. And so this is what we are going to be reckoning with as we head into the summer, is how long does that potentially last?
Well, then that's just a lovely transition to talk about ExxonMobil and Chevron and their executives' views on this oil price shock and how they are responding to it. And if there is one theme right now that you are hearing from oil executives, it is, we don't think this is going to prolong. We are not expanding capacity because 6 months from now, we think that oil prices will be lower than where they are right now.
And even beyond that, like not even the 6 months, remember that when you talk about drilling an oil well, you're talking about, hey, is this going to be profitable over a 10 to 15 year period? That's ultimately what the math is. And Mike, I have a question for you. On the back end of this crisis, what do you think countries that can't produce very much oil are going to be doing in order to make sure they don't end up back here again?
Buying a bunch of oil and storing it in giant bins.
They're going to be doing that.
Yeah.
They are also going to be saying, hey, how can we diversify our needs away from hydrocarbons that we can't produce ourselves?
Yep. So nukes if we can build them.
Nuclear, solar, wind,
all
everything. Like all the stuff where it's like, hey, we don't have to have things shipped through the Strait of Hormuz. Great, let's figure out how to build that.
Yep.
So I think that part of this is also energy executives looking at the longer term picture and saying, yes, in the short term, next 1 to 3 years, there is absolutely going to be massive demand for our product. On the back end of that, it's a little more uncertain because countries that can't produce their own oil because they don't, like it just doesn't exist there in the ground, they're going to say, okay, no, this is not for us. And the other thing, the ones that do have those resources that need to fill that extra demand in the short term, they're probably going to spool up some other production as well on the margin. You already see this in terms of how Mexico's talking about oil. Brazil is talking about it. Like you see this in these areas. And so you get to a place where, yes, oil prices, and again, who knows exactly how long this particular situation in Hormuz takes to resolve. But either way, oil prices are going to remain elevated above pre-war levels for probably 2 to 3 years absent a recession.
So getting to specifics here, ExxonMobil mentioned that about 15% of their worldwide output remains offline right now due to war-related production outages. That cost them some $400 million. Fortunately, though, the excess price that they're getting for selling their oil resulted in a gain of about $1.7 billion. So the $400 million loss was more than offset by the higher prices they're selling their product at. You have to remember, companies like ExxonMobil are so heavily integrated that they have constant levers to make money and lose money in just about any scenario. They refine product, they sell it at gas stations, they pump it out of the ground, they transport it across the globe, and so depending on the environment, they make and lose money. But yes, any company like Exxon, like Chevron, BP, are going to benefit from much higher oil prices regardless of how much production, generally speaking, will go offline during that period of time. But yeah, the key message that I think is being delivered from companies in the U.S., both big and small in the oil production space, are we just aren't, our investors are not going to give us the room to go expand production.
And if you want the reason why, the answer can be found in the 2010s. If you take a look back throughout that period, and I'm pulling it up right now just so that I can speak authoritatively on the topic. Ah, yes! It's the summer of 2014. The World Cup is in Brazil, I believe. I think it was that one. The World Cup was somewhere, and people were playing soccer. And they were happy to be playing soccer because the price of oil had been bludgeoned down from $100 a barrel down to, by the end of 2015, $26 a barrel.
You got that low?
Yes, Michael, allow me to introduce you to West Texas Intermediate. It is the U.S. crude benchmark, and at, let's see, in September of 2014, it opened the month at $95.81 a barrel. By February 1st, by February of 2016, it hit a low of $26.05 a barrel.
Remember the days when you could move out there in your RV and make like $100,000 in North Dakota cooking for oil workers?
Yeah, that was back in like the early 2010s. It was one of the few like good jobs that you could find then because the rest of the economy kind of sucked.
Yeah.
So the reason that I point out this year is because what happened then is the U.S. was going through this shale boom back in the early 2010s. And Russia and OPEC got kind of upset that the U.S. was, able to make so much money, basically, and said, hey, screw you guys, we're just going to turn on the taps. And so what you ended up with was just this flood of oil coming onto the market that literally cut the price by 3/4. And talk to anyone that worked in the energy industry then, and they will tell you it absolutely shredded companies. The amount of money that was lost, not just then, but in the 5 years after, with companies just trying to dig out from this, was just ridiculous. So energy companies and their boards basically at this point are like, no, we're not going to be doing that again because they went willy-nilly back in the 2010s and it burned them. And so capital discipline is the name of the game for those guys now, and they don't want to go through that because, quite honestly, a lot of the people working at these energy companies now worked at ones in the 2010s that went bankrupt because of overproduction.
Yep. So the lesson they've learned is take the higher prices, but don't overproduce.
Quick break here. We've got Apple earnings next.
Remember, you can watch the show live every day on our YouTube page. We've got market updates and breaking business news all morning long, plus a full archive of all our show's content. It's all there with the click of a button at youtube.com/The Financial Exchange Show. It's important to update your estate plan as changes occur in your life, or you can wind up with significant issues that may affect your future. Get Cushing & Dolan's new guide called Detour Ahead, Estate Planning Potholes to Avoid. Call 866-848-5699 and get your copy today, or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit DAV5K.Boston. That's DAV5K.Boston.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the biggest challenges in financial planning is seeing the full picture. When your investments are spread across multiple accounts, it can be difficult to know how much you actually have and whether your strategy is really working. You might be taking on more risk than you realize or missing opportunities to better align your portfolio. Bringing your accounts together can help create clarity so you can see your total assets, your true allocation, and make more informed decisions about your financial future. Our new guide is called Consolidating Investment Accounts. It walks you through how to get organized, simplify your strategy, and build a more complete financial plan. Call 800-393-4001 to get your free copy today. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
I was 24 when I had a stroke. I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our #1 killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together, let's go red for women.
Visit goredforwomen.org to learn more.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
From Fed decisions to market moves, watch the Financial Exchange live on X. This is the Financial Exchange.
Get your questions into the Money Matters mailbag, which is next hour at about 11:35. In order to get your question into Chuck and Mike, just email us to tfeshow@gmail.com. Once again, tfeshow@gmail.com. Or you can leave us a voicemail at 339-399-4333.
The voicemails are fun because normally you guys have to listen to us for a couple hours a day, and instead you can force us to listen to you.
Yeah, we like to spice it up.
You know, it's payback. It's like you could say all the things you've always wanted to say.
Mm-hmm.
Tucker might have to bleep a few of them out if, you really say what you think about us. But, hey, it's, you sit in the chair, you got to deal with it.
Yeah, no different than going home at night.
No, it's all good. What happens at your house? Let's talk about this piece from Bloomberg. Apple forecast tops estimates even as Mac shortages linger. So we got a couple interesting things here. The first is that Apple is their guidance, as they said, is insane for the upcoming quarter. They guided to 14 to 17% year-over-year growth for Q2. Expectations from analysts was 9.1%. So Apple saying, yes, sales are going to go way up. The interesting piece, though, and what I'm wondering about this, is Tim Cook, again, Tim Cook's on his way out.
Sure.
he still ended up answering some questions in this call that John Turnus, I don't know if he didn't want to or how they divided this up, but I found the ones interesting that he talked about, specifically because he talked about the memory shortage and said, guys, like, this memory chip problem is not going away anytime soon. He's like, this isn't going to be like a couple quarters. This is a problem for the foreseeable future. And what I got to tell you...
Sorry, we got to be clear. I know we've talked about this, but
yeah.
why there's a memory shortage is because of the AI demand.
Yes. The artificial intelligence chips that power these data centers use enormous quantities of memory, and because of all the money flowing in there, the AI data centers are willing to pay ridiculous prices, like 4 times as much as a few months ago for these chips. It's gotten to the point where Costco has taken memory chips out of their display computers because they don't want people coming into the store and stealing them. Like, that's how crazy it is right now. And Tim Cook said, look, this is going to be a problem for a while. I'm really wondering what happens on Apple's pricing for upcoming products because, again, their margins are still really good right now, but this is eventually going to become problematic if it stays in this way because, remember, when Apple goes and negotiates, they are the 800-pound gorilla in the room. They come in and they say, okay, for iPhone, what's the current one that's out? Is it 17 or 26?
17.
iPhone 17. Hey, here is the quantities that we need in the pricing, and here's the contract. If you want to deal with us, these are the terms. And that's just what they get.
Yep.
That contract was signed before this memory thing became a problem.
Right. So their profit margins are reflecting prices that they paid for memory.
Right, the
under old contracts.
The iPhones that you have right now in your hands, like if you're going to the Apple Store and buying one today, it was made like in Q4 of last year and finally got shipped over and then, so on and so forth. The question is going to be what happens to pricing as you get into the next generation this fall. And I think that's interesting. But, yeah, Apple with, again, a nice big quarter. You can't call it a nice little quarter when you did $111 billion in sales. That's more than $1 billion a day of Apple stuff that's being sold. It's a whole lot of fruit. And so, I mean, to be a company doing $400+ billion in revenue and you're still growing your revenue at double digits.
Pretty wild. Yeah, it is.
That's insane.
Notable, Tim Cook, this was previously known, but September of this year, he's out. How long has Tim Cook been
15
years.
Yeah, that's
Tim Cooked.
Quite some time. The other piece, the services revenue portion of this, I know they're not realizing a ton right now, but a lot of I'm trying to think of where Apple's playing in the AI space because largely they're not right now. They're licensing some technology from Google in order to make their assistant a little bit smarter. But if we see it show up somewhere in the short time, you might see services revenue boost with people subscribing to these AI models on their mobile devices. I don't think that's going to be a huge boost, but I continue to wonder how long Apple waits before diving in more to AI.
I don't think they're going to.
Just at all.
No, I guess here's, we always say that Apple tends to wait. Apple's never the first mover.
No, they're not.
They like to go into markets that other people have already explored, and then they say, okay, this is for us. I don't know that artificial intelligence is one where you can really do that. It's kind of like... There's a reason why Apple didn't get into search, just as an example.
Yeah.
Part of it is they didn't need to because they already had all the data that they need there. I think, quite honestly, they're looking at it, they're like, you guys can spend all of the money on this if you want. And if we want something, we can license it from you. If you want to be the exclusive provider of AI on Apple, great, you can pay us to do so, just like Google pays us to be the, default search engine. And they're happy to take, whatever side they want there. Because I don't think you can catch up, quite honestly. If you really believe that the AI race is being run in terms of, hey, you got to build these data centers and models to then have the inference capacity and this, I quite honestly think that if you're trying to start that now, I think there's just too far to go to catch up.
It's just amazing to me to see a major tech company avoiding AI and being a beneficiary in the stock and receiving benefits in the stock market today, right? AI has been sucking up every molecule of oxygen in the room for the last 3 years, and yet Apple still manages to surprise to the upside while zagging when everybody else is zigging.
They're the Toyota of tech.
Yeah.
Again, 5 years ago, everyone and their grandmother was like, hey, we got to build the electric vehicles. Everyone's going to want the EVs. And Toyota was like, nah, pass. And it turned out to be right. Even though the new Highlander is going to be electric only. Who knew? Quick break. When we come back, we've got Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Some of the biggest estate planning mistakes are the ones you don't even know you're making. At Cushing & Dolan, they've seen it all. Plans that aren't complete, that only rely on a will or lack of funding of a trust. These are the kind of mistakes that can lead to probate, unnecessary taxes, or even putting your assets at risk. As your life changes, so should your estate plan. Marriage, grandkids, new assets, and even changes in tax law can impact how your plan should be structured. That's why Cushing & Dolan created a brand new guide called Detour Ahead, Estate Planning Potholes to Avoid. It walks you through the most common and costly mistakes and how to help protect your assets, your family, and your future. Call 866-848-5699 to get your free copy today. That's 866-848-5699. Or you can request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Consolidating Investment Accounts. Mike, how does someone end up with just this sprawl of different accounts over time?
We've all seen it before with family members or even ourselves, but according to the BLS these days, the average person stays at a job fewer than 4 years. And so imagine you're job hopping from place to place. You might have a retirement plan through there. And all of a sudden, a decade into your career, you could have 2 or 3 different retirement plans just from, changing jobs and taking that next promotion at a new place.
It doesn't even just happen with different retirement or investment accounts. It can happen with bank accounts or insurance policies. You can end up with stuff scattered everywhere.
Well, we all know that, that aunt or that family member that is always scouring for the best CD rate or interest rate on the savings account, or, has some money with this broker and this financial services company. And all of a sudden, you can be looking at a situation where over the years, you have a dozen different places where you keep assets, and that becomes more and more complicated to ensure that your spouse is on there, that you have beneficiaries aligned properly, and that you can actually monitor these things.
Folks, our guide is titled Consolidating Investment Accounts, and there are two ways that you can request it. The first is by calling 800-393-4001. The second is by going to armstrongadvisory.com. That phone number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, traders are turning the calendar to May with markets adding to their rally. In April, both the S&P 500 and NASDAQ notched their largest monthly gains since 2020, driven by strong earnings and optimism around tech. Right now, the Dow is up by 0.5%, S&P 500 up 0.7%, NASDAQ up 0.9% or 217 points. Russell 2000 is up about 0.25%. 10-year Treasury yield down 3 basis points at 4.358%, and oil retreating 4% today, trading at $100 a barrel. Apple gaining 5% after the tech giant reported its iPhone revenue climbed 21.7% to nearly $57 billion in the previous quarter. Meanwhile, SanDisk shares are up 2% after the data storage company beat earnings expectations and offered stronger than expected guidance. Western Digital also impressed with its quarterly profits, yet the stock is down over 1%. Elsewhere, Atlassian stock is rallying 21% after the software company reported strong cloud growth and data center revenue. Video game company Roblox cut its full-year guidance as efforts to boost its safety features weighed on its latest results. That stock tanking 15%. Reddit reported double-digit sales growth in ad revenue and boosted sales and profit, sending shares up by 11%, and Clorox down by 9%. After the consumer products company cut its full-year earnings guidance, reflecting increased costs from the acquisition of Purell maker Gojo. I'm Tucker Silva, and that is Wall Street Watch.
Let's see. We want to talk some AI stuff for a little bit. Not a day goes by that we don't talk about AI.
Yeah, look, this was easily the biggest week we'll get this quarter for earnings from those companies that are driving the spending. So I think it deserves a wee bit more attention, don't you, Chuck?
Yes, I do.
So Amazon, Microsoft, Meta, and Alphabet all reported earnings 2 days ago. Yes, yeah. Wednesday of this week. That market capitalization combined, I believe, exceeds $11 trillion. And now their spending on CapEx for calendar year 2026 now exceeds $700 billion. I think it's closing in on 750. Okay, 710 for the year. Started this year at $600 billion.
The projections next year are like 830, and the year after like 1.1 trillion. So it's, again, we're realistically talking pretty close to $3 trillion in CapEx 26 through 28.
So good news and bad news. Good news is we're very clearly feeling it when it comes to things like measurements of GDP. Without this spending, the economy, granted, it's impossible to pull that spending out and guess what the economy would be doing, but it is a major contributor to GDP growth in the first quarter, and I expect that it will remain so for the next several. Other good news that I take, not every company is being treated equally, right? It's not just, hey, because you're spending the money, we are going to reward your shares. Alphabet, Amazon, generally speaking, rewarded this year. This quarter. Microsoft, Meta, not so much. And so I do like to see that investors are at least differentiating between good plans and uncertain plans when it comes to this AI spend. But I'll tell you, and I know you voiced this earlier this week, Chuck, is the questions of a year ago about how this is going to be monetized over what time period and whether or not these companies can actually make a profit on it the way they were on search and advertising and the other businesses that they have remains a very open question and very difficult to make the math work.
Yeah, it's one where the only way that I can figure it out is the cost for using AI has to go up quite a bit, which in turn might reduce the demand for AI, which means the cost has to go up more than in order to cover this. And so I think where I land on this is it might be that until you see big improvements in the efficiency of AI, where it may end up being like 3 or 4 years from now is, yes, it can do amazing things, but it's not really a huge cost savings over employees necessarily.
The humans are cheaper than the robots?
It might be that we are until the AI figures out a way to cheapen itself, which I'm sure it's working on as it tries to eliminate us from, running the place.
The question for the industry as a whole is which company is going to be the first one to blink under financial pressure, I think, right? If we're looking for a potential turn in this story, which may not come, but, already investors are questioning Meta a little bit to say, how exactly are you going to be making money on $180 billion of capital expenditure? And does that pressure mount to the point where one of these companies needs to pivot away and say, yeah, you know what, we sank this money. We were planning on spending quite a bit next year, but like we've done with the metaverse or other types of projects that just didn't work out the way we planned, we're going to reshuffle the deck, go back to the drawing board, and go back to what has made us this company in the first place, which is delivering products to your home or selling cloud capacity or delivering advertisements to a whole bunch of people at 70% profit margins.
The question that's going to matter for the broader economy then is, well, that's fine, but tell me about the debt. Because it's one thing to say, okay, like we're going to pivot away. If you're Meta in the metaverse, just as an example, Meta didn't take out any debt to get all metaversical on us. Mark was just like, hey, I want to wear headsets. I think they make me look good. Let's spend $40 billion in order to make me look good in a headset with no legs. Thank you.
Yes.
And that was fine. Like, investors eventually tolerated it because the company was making money and it wasn't affecting the bottom line, and that's all well and good. But now you've got dudes like Oracle coming in being like, hey, what do you mean cash flow? What does that mean exactly? Because, yes, they have to raise a ton of debt in order to cover these costs. And the problem is, if that debt gets to a certain size and they just abandon this, the math doesn't really math for some of these companies. Like, it becomes problematic just in terms of servicing the debt if you go out a few years at these build rates. And the other piece then is, okay, if some of these companies can't service the debt, then how much of it is out there, and what are the broader impacts if some of these companies have to default on it to the U.S. economy?
I know that the scale of this spend at this point far surpasses the spend on things like the internet build-out or railroads or radio.
Dollar-wise, not GDP-wise.
Yes. But let's talk about the historical context here. And I recognize many, many people are going to tell me that AI is different than railroads or different than the internet.
No, it's not.
But, well, many people are going to tell me that, though.
They're wrong.
But can we talk about the historical context of, I mean, we still have railroads today.
Yes.
I don't think we can look at that as a failure. We still have the internet. That's how many people
our show is on radio.
To the show.
If you haven't paid attention to, not paid attention, if you've never read about the bubble that happened in radio in the early 20th century.
Well, I'm sure that plenty of people haven't. So let's explain how that went. Because it's not completely different than what we are experiencing right now.
No, what happens is there's an exciting new technology that everyone sees the potential in. And so a ton of capital rushes in. Some of it gets deployed correctly. A lot of it gets deployed incorrectly and can't be profitable because there's just too much money chasing too few returns. What ends up happening in every one of these major cases is you have a technology that does end up transforming the world for decades or centuries afterwards. But a ton of money ends up being lost in the process because there's this rush to invest when in the short term for actually being able to fill the demand, it's just not there. There's just not enough demand to meet the supply. And so you end up with this malinvestment bubble that eventually pops. And so the two things that I think are going to remain true, in my opinion, look, at some point in the future, there are going to be an awful lot of people hurt by the AI bubble. It might still have, like, years to run.
Sure.
It might have a decade to run. Like, I'm not saying this is tomorrow, but ultimately, we're going to be using a lot more AI at the end of said bubble than we were at the beginning, or even right now. So those two things are true, I think, and they can be.
And there will be winners. There'll be a lot of losers, too.
Losers. Let's take a quick break. When we come back, let's talk a little bit about the national debt crossing an important milestone.
Subscribe now to our YouTube page, where you'll find daily interviews and full shows of the Financial Exchange. We'll get you caught up on anything and everything you might have missed, right here on the Financial Exchange.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the biggest challenges in financial planning is seeing the full picture. When your investments are spread across multiple accounts, it can be difficult to know how much you actually have and whether your strategy is really working. You might be taking on more risk than you realize or missing opportunities to better align your portfolio. Bringing your accounts together can help create clarity so you can see your total assets, your true allocation, and make more informed decisions about your financial future. Our new guide is called Consolidating Investment Accounts. It walks you through how to get organized, simplify your strategy, and build a more complete financial plan. Call 800-393-4001 to get your free copy today. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Some of the biggest estate planning mistakes are the ones you don't even know you're making. At Cushing & Dolan, they've seen it all. Plans that aren't complete, that only rely on a will or lack of funding of a trust. These are the kind of mistakes that can lead to probate, unnecessary taxes, or even putting your assets at risk. As your life changes, so should your estate plan. Marriage, grandkids, new assets, and even changes in tax law can impact how your plan should be structured. That's why Cushing & Dolan created a brand new guide called Detour Ahead, Estate Planning Potholes to Avoid. It walks you through the most common and costly mistakes and how to help protect your assets, your family, and your future. Call 866-848-5699 to get your free copy today. That's 866-848-5699. Or you can request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For many families, an energy bill can mean difficult choices, wondering when or even how it will get paid. It shouldn't be that way. For more than 40 years, Citizens Energy has helped families afford life's basic needs. First, through Joe for Oil, and now through Joe for Sun. A simple way to save on electricity at no cost to you. No installation, no equipment, and you keep your utility company. We keep it simple and help you lower your utility bill. Call 1-855-JOE-FOR-SUN or visit citizensenergy.com to see if you qualify. Sponsored by Citizens Energy.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Register today for this year's DAV 5K on Saturday, November 7th at Fort Independence on Castle Island. If you're not able to participate, you can still support our great American heroes by visiting dav5k.boston and making a donation today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston.
So, we crossed a milestone on March 31st where the publicly held debt of the United States of America crossed 100% of GDP. Now, the total debt outstanding is higher than that, but a bunch of it's held by the Fed and other central banks and things like that, which means it's not publicly held because the Fed is fundamentally a different buyer of debt than you or I. But basically what we have here is we are continuing to run up that debt to GDP ratio because we're running 6 to 7% deficits right now with about 5% nominal growth, which means this is going up about 1 to 2% a year. And so that's kind of where we are. Yeah,
it's okay because I see a lot of fundamental seriousness in Washington about dealing with our nation's debt issues.
You remember Doge last year?
Yeah,
we haven't talked about that in a while.
Lasted like a week and a half.
Yeah, it's again, it just was something that fundamentally didn't do anything as it relates to dealing with the deficit. It did, a bunch of people left like the federal government, but as we outlined, employment is not the main expense of the federal government. And so if you're not willing to deal with the actual stuff that is, or raise revenue, you're not going to get to a point where you're actually dealing with the deficit. So that's kind of where we are.
Yeah. And, again, we talk about the deficit, and this isn't directly tied, but obviously we have Social Security and Medicare programs that the debt to GDP, right? There's no magic number here where this becomes an explosion.
No,
or
Japan's
implosion.
like 200%.
Yeah. So there is no magic number. But when it comes to Social Security and Medicare, there is, in fact. There is a magic date at which we estimate the trust fund will be empty and beneficiaries will receive a 20-some-odd% cut to benefits on Social Security or Medicare. I don't think anybody really has an answer as to what happens in that case. I guess programs get cut and benefits get cut substantially. So you have two fundamentally different issues, and yet even with those ones where there is a deadline coming, the only Social Security proposals that have gone anywhere over the last few years
were to raise benefits.
For recipients. There's another one floating around there right now to add an additional benefit for caretakers, caregivers rather. So anybody that, for instance, cares for a child or an adult would get credit years for doing so on Social Security and therefore increase their own
hold
benefit.
on.
Yeah.
Hold on.
Yeah.
Holding.
I want to make sure I'm understanding this.
Yeah.
And this is not to disparage anyone that is raising children in place of like working a job outside the house. But you're telling me there's a proposal in place that will give people credit for Social Security for doing that despite not paying into the Social Security tax system.
The Social Security Caregiver Credit Act of 2023 proposes providing up to 5 years of Social Security earnings credits to unpaid caregivers, protecting their retirement benefits. It covers those caring for dependents under 12 or with chronic illnesses for at least 80 hours a month, aimed at offsetting gaps in employment.
Okay, I'd say this in the nicest way possible, but that's completely insane. It's not that isn't work. That's not what I'm saying.
Sure.
What I'm saying is that it is fiscally insane because you are creating more liabilities without the matching asset.
Chuck, I mean, you could say the exact same thing about the GPO and the WIP.
I know, but here's the thing. I'm starting to get a little bit upset about this. Okay? Because, again, My favorite scene in one of my favorite shows, Succession, is where the dad's talking to all of his kids, and he just goes, "You are not serious people," because they're putting out just like crap. And where we are right now when it comes to any of this is there is no one who is a serious person about the deficit who's actually in a position to do anything about it.
Yeah.
Does anyone listening know that? Again, like there are two different ways that you can deal with this. You can balance this one of two ways. You can cut entitlements or you can raise taxes. That's it. Do you know what the only things are that we do right now? We raise entitlements and cut taxes. It's the exact opposite. It's the exact opposite.
Yes.
I'm just... We are fundamentally unserious people because we want all of the ponies and unicorns, and we don't want any of the poop from them. We want poopless unicorns. And you can't have a unicorn that doesn't poop. This is ridiculous at this point.
It is rather silly. Yeah.
So, I don't know what I'm going to do. Like, again, there's nothing you can do as like a private citizen.
Yes, there is.
What can I do? What can I do, Michael? Tell me.
Again, vote people out of office that pretty much everybody that's sitting there.
And then the new people come in and they do the same thing.
I recognize this. But
Mike, here's the problem. Every single person that runs for office now runs on being an outsider because we don't like the insiders. And then
they get there
and they don't do anything. They just become the insiders. And so it's like, maybe I want someone who runs on being an insider, actually. Like I'm out of options at this point. I don't know what to do because no one wants to deal with this because we just want all the fun and none of the pain. And eventually the pain's going to come from an involuntary choice that like we're forced into. But like we're just not serious people. And the wild thing is, you could point to a time. You go back to the 80s and 90s, Reagan raised taxes as a Republican. Clinton in the 90s cut entitlement programs as a Democrat.
Yeah.
Bush raised taxes as a Republican. Like, you can go back in time to the 80s and 90s and be like, oh, these are people that had to buck their party's orthodoxy because it was, like, the right thing to do for the country. And then you get to, like, 2000, everyone's like, new millennium, new math, man! Like, what are we doing here?
Yeah.
1 + 1 = 5! I'm sorry, man. Like, it's just... We're not serious people. And until we want to actually do something about it...
This is a nonpartisan issue, folks.
No, it
consistently go look at debt increases over Republicans, Democrats for the last 26 years. It has been just poppycock.
Let's take a quick break, and when we come back, hour 2, I'm going to try to cool off a little bit in the interim.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your kids to your accounts or adding their names to your real estate deeds as a joint owner. Won't this avoid probate?
You're absolutely right. It would avoid probate, but there are better ways to avoid probate than just doing something simple, right? Simple isn't always better. Throwing a name on an account or adding a designated beneficiary or a joint owner on a piece of property might not be the best way to go. Here's the problem. If you name one of your children as a joint owner and you have 3 children and you put that child on just because it's convenient and they're geographically close to you, well, you could be accidentally disinheriting your other children because this property, this asset will only go to that child. That child doesn't have to give it to the other kids. So that's a problem. And if you put your name, if you add a child's name to your real estate, now you're exposing it to that child's creditors, that child's potential divorces. That's never good. And plus, you've lost control over it. If you try to sell it, you need that kid's permission, and half the money would go to that kid. Please, folks, set up a trust, fund your trust much better than just trying to do it shorthanded and just give away assets or adding names to accounts.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network.
For many hardworking families and retirees, an energy bill comes with an impossible choice. Paying the bills, putting food on your table, and keeping your family warm in winter and your home cool for the summer. But it shouldn't be that way. For more than 40 years, Citizens Energy has made one simple promise: to help households afford life's basic needs. Through Joe for Oil, we help neighbors through the coldest winter nights. Now, we're building on that same promise with Joe for Sun, a new way to save on electricity year-round. Our solar projects are already in communities across Massachusetts and New York, helping thousands of households save money. For many families, that means saving up to 50% on electricity. No installation, no equipment, and you keep your utility company. Like my dad's program before, we keep it simple, helping lower your utility bill through community solar at no cost to you. Call 1-855-JOE-FOR-SUN or visit citizensenergy.com to see if you qualify. You've trusted Citizens Energy to show up when it matters most. We're still here, ready to help.
Sponsored by Citizens Energy.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide this month titled Consolidating Investment Accounts. Mike, what are some of the problems that people run into when they have accounts scattered everywhere?
The first one is just difficult to maintain and monitor. I can't tell you how many times I've met with somebody who has a life insurance policy that still has their brother on it instead of their wife or their husband, for example. So it does become really tough to monitor those things. If you're getting to required minimum distribution age, there can be certain rules around where you take money out of specific accounts, and if you miss it, there can be tax penalties. So it just becomes complicated to administer everything.
Despite that, there are still some cases where it makes sense to maintain a number of separate accounts as opposed to consolidating.
Oh, absolutely. I mean, we all know cases where, hey, that new bank is going to give you a better CD rate or introductory rate, and that can be worth real money. In other cases, if you have a retirement plan, there can be special benefits to keeping the money there. Maybe it is a excellent plan with really low costs. Maybe it'll allow you to avoid a required minimum distribution if you're still working into your 70s. Or there can be other strategies too, having money in a retirement plan and allowing you to do what's called a backdoor Roth conversion, all sorts of things that allow you to take advantage of having accounts in specific places.
Folks, the guide is titled Consolidating Investment Accounts, and there are two ways to request it. The first is by calling 800-393-4001. The second, by going to armstrongadvisory.com. That number again is 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker here with you, and kicking things off today, we've got a little bit of movement happening across financial markets. S&P's up about 0.5%, 38 points. The Dow is up about 0.5% as well, 284 points. NASDAQ Composite up 211 points, a little less than 1%, so all three major U.S. indices are in the green. 10-year Treasury pulling back a touch after rising for most of this week. It's down 1.6 basis points to 4.374%. Dollar index down 0.21% to 97.71. Gold is now up $15.90 an ounce after being down about $40 an ounce earlier in trading. It's at $46.46, which is fun to say, fun to look at. And we've got crude oil, West Texas Intermediate, down $3.51 a barrel to $101.54 right now. And despite that, AAA national average for gas prices is at $4.39 and 2.2 of a cent rather. Up 9.2 cents overnight. Diesel moving up about 8 cents as well. Diesel is now 24 cents away from a new all-time high, whereas the national average for regular gas is still about 62 cents away from an all-time high. A little bit of news that just popped up 9 minutes ago, according to the Wall Street Journal. Their exclusive report, Spirit Airlines prepares to shut down as rescue deal falls apart. Big thing, they were hoping to get a $500 million loan from the federal government. before running out of cash. It appears that, according to the journal's reporting, that is not likely to happen. They have not been able to get support between bondholders and the government to make it work. And so it appears that they are getting close to a ceasing of operations in the coming days.
Shut it down, strip it for parts.
Now, anyone who followed their attempted merger with JetBlue several years ago knows that despite the fact that I'm a big believer in, hey, we need more competition, I said at the time, look, if you're not going to allow these companies to merge after allowing all of the other major airlines to merge back in the early 2000s, they're at a competitive disadvantage that is not going to allow them to survive. And lo and behold, that's exactly where we are right now. We have different sets of a different playing field for companies that were able to merge between 2005 and 2015 and ones that tried to merge after. And this is going to put one airline with 14,000 employees out of business. And you've got others that are looking around wondering if they're next. And that's just kind of where we are right now.
I don't really know how a Frontier and a JetBlue compete today. Their 2024 passenger volume was about 40 million. These are seat miles. So Frontier Airlines had in 2024 about 40 billion seat miles. United had 300.
Is that a lot?
It's just
300 million, yes.
These are billions of
300 billion,
available
yes.
seat
miles. Not 300 seat miles, 300 billion.
300
yes.
billion.
So,
American had 293. Delta had 288. Like Southwest can still compete at nearly 200. You go take a look at these other companies.
They don't have the scale.
They just don't have the scale to be able to do this.
No. The only way that merger should not have been approved is if you went to Delta and said, you got to figure out some way to make half of you Northwest again. And go to American and say, half of you's got to be U.S. Air. And you go to United and say, half of you's got to be Continental.
I'll miss Spirit. Again, assuming this Wall Street Journal reporting is true and accurate, I mean, I flew them several times.
I did too.
My mother-in-law was nervous as heck on our latest vacation when I booked her on Spirit because she was pretty sure it was going to liquidate while we were on vacation. It didn't. But look, they were consistently 30 to 40% cheaper.
Yes.
You knew what you were getting. It was, they
didn't hide it.
$75 to carry on a bag, $75 to check one, pay for everything you did. But you know what? That was the model.
Your knees were in your chest with like 25 inches of pitch between the seats.
Yeah.
But no one made you fly that flight. No. It was okay, great, it's cheaper and fine, I'll hop on. But yeah, they just can't compete in a world where some mergers are allowed, but theirs is not.
Mm-hmm.
Want to talk about this piece from ABC? It's titled, Some Drivers Seeking Workarounds as Gas Soars to Highest Prices in 4 Years.
I was really wondering what these workarounds were.
Horse.
Well,
I took a horse to work.
I sold my $20,000 car and I bought a $60,000
car. 10 o'clock last night.
I'll tell you what I did. I thought that maybe if I could put some coal in the blender, I could make it into gas, and it turns out that doesn't work.
Uh-huh.
You can't just mix coal and water in a blender and fill your tank with it. That's a bad approach. So, yeah, I don't think there are really workarounds. The closest I've found to a workaround is what some of these people do, I guess, which is, hey, basically since the start of March, if I get down to 3/4 of a tank, I stop and fill up 4 gallons of gas because it's going to be cheaper than the next day.
Well, these people
that's basically the only thing that I can do.
I mean,
I can't store gas at my house.
Yeah, the solutions that these people were coming up with was well, I can only afford to put $20 in my tank, so I'm going to put $20 in my tank, and that's going to get me a lot less, a much shorter distance than it used to. And that's not a workaround. No,
that's called supply and demand.
Yeah. A workaround would be, picking up your neighbor and driving to work together, but we don't like our neighbors.
I like my neighbors. I think they're great. We did have a text that came in on the topic. Companies should be encouraging their employees to work from home to reduce demand for oil and gas for commuters. In fact, if you talk to anyone who happens to live in Asia, it's not just being encouraged, it's being mandated in a lot of cases, either, partial or full work-from-home schedules depending on the country and the specific employer. Here, we're not there yet just because the U.S. being in the unique geographic and resource-rich position that we happen to enjoy, we are able to avert some of what's gone on to this point, but we're going to get to a point where as long as Hormuz remains closed, prices are going to continue moving up over the course of the summer. There is no way around it as long as Hormuz remains closed.
Yeah. I mean, look, I like the idea of fewer drivers being on the road, but companies are not going to do that out of the goodness of their own hearts. If you think it's worthwhile to provide a tax incentive to companies to say, hey, encourage your employees to get off the road and we will throw some money at you, then they'll do it. But they're just not going to say, yeah, you work from home because gas prices are higher.
Let's take a quick break, and when we come back, do we want to talk Zuck? Do we want to talk AI agents becoming day traders?
Yeah, let's go to AI agents becoming day traders because that seems like a basket of fun. Quick break. Trivia's coming up next.
Missed a show? You can find them on our YouTube page. The show streams live every day, but every hour is archived, including all of our most newsworthy interviews. Go to YouTube and search for the Financial Exchange Radio Show. Some of the biggest estate planning mistakes are the ones you don't even know you're making. At Cushing & Dolan, they've seen it all. Plans that aren't complete, that only rely on a will or lack of funding of a trust. These are the kind of mistakes that can lead to probate, unnecessary taxes, or even putting your assets at risk. As your life changes, so should your estate plan. Marriage, grandkids, new assets, and even changes in tax law can impact how your plan should be structured. That's why Cushing & Dolan created a brand new guide called Detour Ahead, Estate Planning Potholes to Avoid. It walks you through the most common and costly mistakes and how to help protect your assets, your family, and your future. Call 866-848-5699 to get your free copy today. That's 866-848-5699. Or you can request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Over the years, it's easy to collect investment accounts, including old 401ks and multiple IRAs. But at some point, it can get hard to keep track of what you actually have. Too many accounts can lead to confusion, overlapping investments, and sometimes missed opportunities. Our new guide is called Consolidating Investment Accounts, and in it, you'll learn how to simplify your financial life, giving you a clearer picture of your strategy, your risk, and your progress. The guide will also walk through how to avoid common mistakes and build a more organized, intentional plan. Call us today at 800-393-4001 and get your free copy of our new guide called Consolidating Investment Accounts. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill. a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Follow the Financial Exchange Show on Instagram and see what's driving the conversation about Wall Street and economic trends. This is the Financial Exchange Radio Network.
All right, time for trivia here on the Financial Exchange. And on this day in 1939, Batman made his first appearance in a comic book. There have been 11 true live-action Batman movies over the years. Despite the popularity of the movies, only one actor has won an Academy Award for their performance in a Batman movie. So our trivia question today is simply, which actor is the only one to have won an Academy Award for their performance in a Batman movie? Once again, which actor is the only one to have won an Academy Award for their performance in a Batman movie? Be the third person today to text us at 617-362-1385 with the correct answer, along with keyword trivia, and you'll win a Financial Exchange Show t-shirt. Once again, the third correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
AI agents are becoming day traders, but gains are elusive.
Is that because day trading gains are elusive, or is that because AI agents are bad at it?
Well, it's both. I mean, look, back in the tech bubble, I think that 3 out of every 4 Americans were day traders. It wasn't that high, actually. But, look, everyone thinks that they're going to, be this great trader. I'm sure everyone thinks that they're going to be able to program a great system so that their agent can be even better than them because it's not emotional and won't make the same mistakes that humans do. So I'm going to, again, look at some of the situations that are described in this piece and be like, oh, okay, you've got some of these, viral posts that go out on social media about someone that made a 5,860% return in 2 days.
Baloney.
And it was later debunked by another AI agent who proved that it didn't actually happen. So ultimately, look, here's the deal. If using an AI agent to trade is no different from setting up a trading strategy for yourself.
Sure.
If you can't describe what your edge is in 15 seconds, you don't have one.
And if you don't know how to day trade yourself, you're not going to be successful in training an AI agent to do so.
No.
By the way, this story, it does seem that the individual that they interviewed had some experience in day trading and trading options and just was busy with his job and wanted to check that out. But I found it funny that he was inspired by the Anthropic experiment in which Claude controlled an office vending machine. And I don't know if this is the same experiment that the Wall Street Journal reported on, but if you recall, it gave away a free Sony PlayStation, ordered a live fish, and was I think it was also convinced that it needed to, kind of become a commie and give away everything in the vending machine.
The vending machine became communist.
I don't really know that that's the best example of using it for day trading, or
right,
what about that inspired you?
What if your trading bot decides it should be communist?
Just distribute all the profits equally.
To who? you
all the other traders.
You want communal ownership of what? I can't even get there.
Yeah. So I guess what are the takeaways though? Because Chuck, I will say that every single piece of software that I'm using these days is telling me about the new AI tool that they have released or about to release or plan to release in the not so distant future. And I think that some of these are going to be awfully useful.
Well,
but
it's all
there's a lot of
ultimately-
danger, too.
It's no different from any other tool. If you go and give a monkey a drill, it's probably going to work out badly. Like, A, you're going to have holes in all kinds of stuff. B, the monkey's probably going to hurt itself. It's not going to go well.
Yeah.
If you train a person to use a drill appropriately, they can be hugely productive and do things that they couldn't do without that tool and that technology. AI is no different, except it, just like, again, power tools, it acts as an amplifier. Like, if you could make a mistake with a hammer, you can make worse ones with a nail gun. AI is the same thing. If you can make math mistakes and trading mistakes using Excel, you can make worse ones using AI agents.
Yeah.
You can also make better decisions potentially if you have good processes, but ultimately it gets back to what is your skill set.
To thine own self be true.
It's like know thyself, know your limitations, know your what you're good at, and ultimately for most people, trading is not something they're good at. It's just not.
If you are evaluating your investment strategy, I know that there is a lot of infatuation on this moment in time right now, a lot of potential or already realized upside due to artificial intelligence, and I think an equal amount of concern about what that ultimately results in. If you're looking for some guidance, especially if you are talking about using that portfolio for your own life expenses sometime in the next decade, I'd really encourage you to get a second opinion. Whether you're doing it yourself, having somebody do it for you, you need to be asking these questions about what is my strategy and how does that strategy need to change as my life develops. If you'd like to book a free consultation with the Armstrong Advisory Group to review that strategy, the number's 800-393-4001. We have offices from Connecticut and Rhode Island up to Maine, New Hampshire, and pretty much everywhere in between. We would love to chat with you, too. You can go to armstrongadvisory.com or call us, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's see. Do we want to talk anything about Meta? I've kind of had enough AI in Meta for the week.
Yeah, we've been beating Zuck down
I can't.
We can give him a break.
Yeah, I can't do any more Zuck at the moment. Can we talk about Warren Buffett calling sports betting a tax on stupidity?
Yeah.
Let's talk about this. So Warren Buffett, who no longer is in the CEO chair, was his retirement effective immediately, or is it? I forget.
He won't be running the next meeting.
In any case, Warren Buffett, not a big fan of gambling. His quotes here, to the extent that states raise money from people who the dollar really means something to them, it actually relieves the taxes on me or other rich people. It's not direct, but it's the net effect, which is true.
Go look at the originations of the lottery systems across state by state. Massachusetts,
yes.
One of the first on that front to really leverage it, and it is a largely regressive tax. It is played more by those in poverty and does dramatically relieve state and town budgets.
And so Buffett, goes on to say, look, I don't like things that make suckers out of people. I don't think the function of the government is to play its people for suckers. And look, there's a reason why so many states have legalized sports gambling now. It's not because they love it. It's because they love the tax revenue from it. And the fact is, between the tax revenue, remember, the tax revenue is generated by the gambling companies that, and end up paying it.
Yeah.
Ultimately, when you factor in the fact that those companies, last time I checked, in order to stay in business, Mike, you need to make money, right?
As far as I know, yeah.
So in order to make money and then have money to pass on in the form of taxes, it means that gambling is not a zero-sum game. It is a game that is inherently rigged against the broad population of gamblers. You just look at how the lines are set, and that is basically how it works. And so it's a situation where the data that's come out is pretty much that like a very tiny sliver of people are the big winners. And pretty much, Tucker, I forget what the distribution is. Isn't it like 90% of people end up being losers in the sports gambling ecosystem?
Sounds about right. Especially me lately.
Feels like that, doesn't it, huh?
Celtics. Sorry. Go ahead.
In any case, I think the big thing here that I keep coming back to, because, again, you talk to any male in their 20s, and they're like, yep, most of my friends have sports gambling debt. If you want to have it legalized, it's fine, but I think we're really kind of borderline destroying parts of society by allowing you to just have it on your phone, and I think you should have to go into a nice, fun, cool sports book and do it there, because it's just less dangerous than being able to sit on your couch and do it.
The statement seems to ignore the addictive piece of it.
Quick break. Wall Street Watch and Trivia Answer next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Long-term care costs can reach thousands of dollars per month and can put a serious strain on your savings. The experts at Cushing & Dolan often see families caught off guard by that reality. Without the right plan in place, those costs can quickly eat through a lifetime of your hard work. But here's the shocker. Many estate plans don't protect your assets from those expenses. The right strategy may involve specific types of trusts designed to help protect your assets, but timing matters. Cushing & Dolan has a brand new guide called Detour Ahead, Estate Planning Potholes to Avoid. It breaks down some of the most common and costly mistakes people make and explains how to help protect your assets, your family, and your future. Call 866-848-5699 to get your free copy today. That's 866-848-5699. Or you can request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For many hardworking families and retirees, an energy bill comes with an impossible choice. Paying the bills, putting food on your table, and keeping your family warm in winter and your home cool for the summer. But it shouldn't be that way. For more than 40 years, Citizens Energy has made one simple promise: to help households afford life's basic needs. Through Joe for Oil, we help neighbors through the coldest winter nights. Now, we're building on that same promise with Joe for Sun, a new way to save on electricity year-round. Our solar projects are already in communities across Massachusetts and New York, helping thousands of households save money. For many families, that means saving up to 50% on electricity. No installation, no equipment, and you keep your utility company. Like my dad's program before, we keep it simple, helping lower your utility bill through community solar at no cost to you. Call 1-855-JOE-FOR-SUN or visit citizensenergy.com to see if you qualify. You've trusted Citizens Energy to show up when it matters most. We're still here, ready to help.
Sponsored by Citizens Energy.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your kids to your accounts or adding their names to your real estate deeds as a joint owner? Won't this avoid probate?
You're absolutely right. It would avoid probate, but there are better ways to avoid probate than just doing something simple, right? It's not, simple isn't always better. Throwing a name on an account or adding a designated beneficiary or a joint owner on a piece of property might not be the best way to go. Here's the problem. If you name one of your children as a joint owner and you have 3 children and you put that child on just because it's convenient and they're geographically close to you, well, you could be accidentally disinheriting your other children because this property, this asset will only go to that child. That child doesn't have to give it to the other kids. So that's a problem. And if you put your name, if you add a child's name to your real estate, now you're exposing it to that child's creditors, that child's potential divorces. That's never good. And plus, you've lost control over it. If you try to sell it, you need that kid's permission, and half the money would go to that kid. Please, folks, set up a trust, fund your trust much better than just trying to do it shorthanded and just give away assets or adding names to accounts.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, May is starting off in positive territory as strong earnings in tech continue to lift market sentiment. Right now, the Dow is up 0.1%, S&P 500 up 0.2%, NASDAQ now up over 1% or 276 points, Russell 2000 edging about 0.1% higher. 10-year Treasury yield down 1 basis point at 4.376%, and oil down 3% today, trading right around $101 a barrel. Breaking news this hour after the Wall Street Journal reported that Spirit Airlines is preparing to shut down after the budget airline had been hoping to finalize a $500 million lifeline from the government before running out of cash. Meanwhile, Apple stock is gaining 4% after the tech giant reported its iPhone revenue climbed 21.7% to nearly $57 billion in the previous quarter. Elsewhere, SanDisk shares are up modestly after the data storage company beat earnings expectations and offered stronger than expected guidance. Western Digital also impressed with its quarterly profit, yet the stock is down over 2%. Elsewhere, Atlassian stock rallying 23% after the software company reported strong cloud growth in data center revenue. Roblox cut its full-year guidance as efforts to boost its safety features weighed on its latest quarterly results. Shares in the video game maker tanking by 15%. And social media company Reddit reported double-digit sales growth in ad revenue and boosted sales and profit. That stock is up by 11%. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question. Which actor is the only one to have won an Academy Award for their performance in a Batman movie? And that would, of course, be Heath Ledger as the Joker in the Dark Knight. And Chris from Pelham, New Hampshire is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Chris. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
The mail's here. Here's the mail that never fails. It makes me want to wag my tail. When it comes, I want a whale. Mail!
You've got questions, we've got answers. It's time for the Money Matters Mailbag. We're tackling your calls and emails on everything from economic policy to global markets and everything in between. Leave us a voicemail at 339-399-4333 and you might hear it on the show. You can also email your question to tfeshow@gmail.com. Now, it's time for the Money Matters Mailbag.
All right, let's get right to the Money Matters Mailbag here in the Financial Exchange. It's your chance to ask Chuck and Mike questions that you might have in the old noggin. So let's get to it here. Tony in Fall River has a question for Chuck and Mike. Tony says, I am 30 years old, have been investing since I was 18. I have multiple investment accounts, and I'm wondering if it's better to consolidate for higher compounding possibilities or keep them separate.
Good question. Can I address that, Mike?
Please do.
So here's the big thing, is multiple investment accounts, they don't compound faster or slower depending on where you hold them. There are different reasons to keep things in different accounts. For example, sometimes you have to just because of tax considerations. you can't just, combine a Roth IRA with an after-tax account, or you can't just combine a traditional IRA with a Roth. There are tax considerations for doing so. Beyond that, occasionally you run into situations where it makes sense to have certain accounts that are separated because maybe certain ones give you access to certain types of investments that you can't access in other ones, and so you might choose to keep them separated that way. From a personal perspective, sometimes just when it comes to different financial accounts, whether it's investment or bank accounts, I keep some separated just so that I can very easily see, like, okay, here's my bucket that I have for X or Y or Z, and so it can make sense to have things fashioned that way.
But I have gotten this question about compounding before, because it's true, right? The more money you have, the bigger the compounding rate. But if you already have the funds, right, like just plain simple, you have two accounts worth $1,000, and each of them get a 10% return, you've made $100 in each of those two accounts. If you put them together and you've got $2,000 and achieve a 10% return,
yes,
you've made the same $200 just in one place rather than two.
Now, there are some times when consolidating accounts can help just in terms of record keeping and understanding where everything is.
Lower fees sometimes.
Sometimes you can end up with lower fees. Sometimes you might move to an account that has, additional services that other ones might not offer. So these are some of the considerations. It's not a binary black and white, like, yes, always do this or no, always do that. But there are valid reasons in some situations to consolidate, valid ones to not. But ultimately, that shouldn't be something that influences your overall ability to compound that portfolio.
Agreed.
All right, next question here to the Money Matters mailbag. Chris sent us an email to tfeshow@gmail.com with this question: is a Roth conversion as exposed to market swings as much as an equity-rich traditional IRA or a 401k?
So, good question, and I think a pretty common one, but I think you're maybe mixing up a couple of concepts here. So, when we talk about a Roth conversion, we're talking about simply taking investments out of one shell and putting them into a different shell that holds those investments. And so it'll surprise people, but can you take your your converted assets into a Roth IRA and buy CDs with it? Yes, you can. In which case, no, I would expect that there would be no market swings if you have an FDIC insured CD holding your Roth IRA assets. Not that that is what I'm recommending anyone do, but the Roth versus the traditional 401k or the IRA or any of these buckets are merely shells to hold different investments, and you can completely customize, if you so choose, what degree of risk you are willing to take in one bucket versus another. Now, there's a bunch of considerations that you need to think about there, in one of them being, hey, I now have a bucket, a shell that will never be taxed again in my life, and one that will, every penny that comes out of it, be taxed. And so should I be investing differently in one versus the other? My guess would be probably yes, but it's highly dependent on your own specifics.
Yeah.
Anything to add on that?
No, it's understanding one is the wrapper, the other is the candy bar that goes inside it.
Mm-hmm.
All right, the final question in this week's edition of the Money Matters mailbag is the following: what are the advantages of broad market and income-oriented ETFs over mutual funds and a tax-advantaged IRA?
So, again, kind of a very big, broad question. Look, quite honestly, it's going to depend an awful lot on specific products, including, again, mutual fund versus ETF is kind of a difference of wrappers. There are some functional differences as well, but hey, ultimately it's going to be what is actually inside of there that makes some key differences. If you're talking about having it inside a retirement account, there aren't really any tax differences in that case because none of the money is taxed until you are withdrawing funds. So ETFs and mutual funds can have some differences in taxation amongst investments that are held inside of them. But beyond that, it's really going to depend on the specific product, the fee structure, how it's constructed, where the income's coming from. There's a lot that goes into that entire conversation there.
Yeah, I was trying to find some averages because averages can kill you because this is, not how you should run things. But on average, exchange-traded funds are less expensive in terms of their expense ratio than in a mutual fund. However, averages can beat you up because there are mutual funds that are substantially cheaper than ETFs. It just depends on what your strategy is and what you are going for. So on average, I'd be comfortable saying that the advantages of broad market and income-oriented ETFs is probably one of cost to the shareholder, but there are a lot of exceptions to that general narrative.
Anything else in the mailbag,
No,
Tuck?
that's it for this week's edition of the Money Matters mailbag. And again, if you have questions for Chuck and Mike, shoot us an email to tfeshow@gmail.com, or you can leave us a voicemail at 339-399-4333.
Let's take a quick break. When we come back, Paul Monica from Barron's joins us next.
From markets to money to business and financial news, watch the Financial Exchange every day on YouTube. Hit that subscribe button and keep up to date on the market news you need to know. This is the Financial Exchange.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Over the years, it's easy to collect investment accounts, including old 401ks and multiple IRAs. But at some point, it can get hard to keep track of what you actually have. Too many accounts can lead to confusion, overlapping investments, and sometimes missed opportunities. Our new guide is called Consolidating Investment Accounts, and in it, you'll learn how to simplify your financial life, giving you a clearer picture of your strategy, your risk, and your progress. The guide will also walk through how to avoid common mistakes and build a more organized, intentional plan. Call us today at 800-393-4001 and get your free copy of our new guide called Consolidating Investment Accounts. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. It's important to update your estate plan as changes occur in your life, or you can wind up with significant issues that may affect your future. Get Cushing & Dolan's new guide called Detour Ahead, Estate Planning Potholes to Avoid. Call 866-848-5699 and get your copy today, or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
For many families, an energy bill can mean difficult choices, wondering when or even how it will get paid. It shouldn't be that way. For more than 40 years, Citizens Energy has helped families afford life's basic needs. First through Joe for Oil, and now through Joe for Sun. A simple way to save on electricity at no cost to you. No installation, no equipment, and you keep your utility company. We keep it simple and help you lower your utility bill. Call 1-855-JOE-FOR-SUN or visit citizensenergy.com to see if you qualify.
Sponsored by Citizens Energy.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
As promised, we are now joined by the one, the only, Paul LaMonica. Actually, there might be another Paul LaMonica somewhere, but he doesn't join us each and every Friday. Paul,
this is
how
the
you
only
doing?
Paul on the planet, Paul LaMonica. I checked.
We have another Paul that hosts occasionally.
Yes.
Is it this one?
No.
Different Paul.
That's
Okay.
Lane.
Mr. LaMonica, how you doing?
Thank you. I've checked before. I've Googled myself. There are other people on the planet with my name. Whether or not there are any other Paul Richard LaMonicas, I do not know.
Well, I appreciate you doing the research for us to
Thank you.
to confirm. Paul, you did some research on CVS as well. This is a company that I don't want to say has been, left for dead for the last 12, 13 years, but just hasn't really gone anywhere. And I'm curious your take as to, will it still continue to go nowhere, or is there somewhere for it to go now?
Yeah, I think you could make the case that there is somewhere for CVS to go, and that hopefully could be up, not down or flat. The stock is relatively cheap, particularly compared to some of its insurance rivals like United Health and Humana. And yes, I said insurance because even though CVS, probably most consumers know it as a drugstore chain, it also owns Aetna, obviously owns Caremark as well, several other businesses within the healthcare ecosystem. So I think that's one of the reasons why it's had this discount. There is this complexity that some investors have argued maybe penalizing the company, and there had been talk in the past about a possible breakup, but that seems to have died down right now.
I guess the part for me that is interesting is, look, as we all know that the thing that ultimately drives a company in the long term is going to be earnings growth. And
Yes.
the thing that's wild is that CVS right now does around $400 billion in revenue, and their trailing 12-month net income was about $2 billion, not very much. It's kind of wild to me that their net income is basically in the same place that it was back in 2005, 2006, when revenue was a tenth of this size. So what's their path to turning all of this revenue into profit, actually, instead of just having it getting eaten up by expenses all the time?
Yeah, no, it's a great question. I think that there are some hopes that the Medicare Advantage, rebates that had been a concern that there was going to be, a much smaller payments, from the government to Aetna as well as their insurance rivals. They're not going to be as tiny as hope. There's going to be a bit of an increase this year, about 2.5% compared to, what had been expected to be, flat. So that should hope boost margins, going forward. And I think CVS also could benefit from some of the turmoil within the retail pharmacy industry. I mean, Walgreens has had some issues and is scaling back. Rite Aid has gone away. You could argue that, yes, now CVS's competition is less about pure play drugstore chains and more about Amazon and Walmart. But, I think CVS still holding in there, and that you could see, earnings, growth pick up in the latter half of this year.
Paul, what about the idea that CVS is we're going to become the place that people go for just, random medical this and that. It feels to me that hasn't really panned out, and instead you've got all of these urgent care places that have popped up instead. Are they still trying to make more inroads into becoming just an overall health center?
Yeah, definitely, without a question. I mean, obviously they still have the minute clinics. I think a lot of people probably have gotten vaccinated there. They have a primary care center brand, Oak Street Health. They have an in-services home provider named Signify Health that they bought. So CVS is clearly of the mindset that being a one-stop shop for consumers' healthcare needs, when they can do things that don't involve maybe a specialist care, is the right way to go. The question, clearly is going to be whether or not having all these businesses eventually, to your point, turn into more steady and higher levels of earnings growth. If not, then maybe there will be calls once again to break up the company, split up. That's something that Karen Lynch, the former CEO, faced. But once she stepped down a few years ago, the new CEO has been pretty adamant that CVS is going to stay intact. It's not going to be breaking up.
Very good. Paul, appreciate you joining us today, and I hope you have a fantastic weekend. You got any Derby picks for us?
I do not. I think my Derby pick is that I need to go to the grocery store and get some mint because I already have the bourbon, so I can make my own mint julep.
There you go. I do. I believe that the Baupost guys have a horse running. I think it's Emerging Market this year. So, hey, there you go. I don't know anything about horse racing. His father was a mother's. About as far as I go on.
It's also Berkshire Hathaway weekend. You gotta
that's right.
Those two converge.
Yep.
Too bad no horse named after Warren Buffett. That would be the pick to go with.
Ooh, yeah. If you had an Oracle of Omaha horse, which would be a great name for a horse too. It would. I gotta say.
Yeah.
Ooh. The Oracle of Kentucky Derby is what city is that in?
Louisville.
It's in Louisville. The Oracle of Louisville. It's got a nice ring to it. Yeah. Paul, appreciate you joining us. Have a great weekend.
Thank you very much. You too, guys.
Can I share a quick Derby story for you?
Sure.
Yeah.
So, a buddy of mine who I used to live with back in like 10, 15 years ago, right after college, he was going to Omaha for the Berkshire annual meeting.
Did he wear a giant hat?
And afterwards, he was going to Mexico for some due diligence on a company that he was researching. He called me from Omaha on the day of the Kentucky Derby, so on the Saturday, and he had forgotten his passport in his room. And so it was like, I don't know, 4 o'clock, and I was at a Kentucky Derby party, and so I was like, okay, what do you want me to do? He's like, I've already talked to United. They have a cargo terminal at Logan. You need to bring the passport to them, give it to this guy, Hank or whatever, and he's going to get it on the United flight that goes overnight to Omaha so that I can pick it up at the cargo terminal there and get to Mexico with no problems.
Did it work?
I think so.
You found Hank?
I found the passport, sprinted to Logan, dropped the thing off, got back for the Derby, and I'm assuming he made it to Mexico because I never heard anything else on it.
Never heard from him again, in fact.
No, now that you mentioned it, I never did.
Hank just took his passport.
Never heard from Hank either. But
that was the first and only time
Hank
Chuck contributed to identity theft.
It's kind of wild. But let's take a quick break for the entire weekend. Hope you all do have a great Berkshire annual meeting weekend and Kentucky Derby race weekend.
Go Bees.
We'll see you on Monday.